bank. I've been there for about 12 years. Just working together and helping the community out. So today we're have a presentation for you guys about the basics of borrowing.
Or lending, which is kind of the same thing, but it's just a slight turn of lingo.
So what borrowing means, lender provides you money and you must pay it back, usually with interest. Credit, the ability to borrow money, debt, money you owe to a person or a business. Please let me know if I'm going quick on this. Types of loans. There's usually installment loans, which are usually term notes, usually repaid in equal payments over a set period of time. Examples include most fixed rate mortgages, auto loans, and student loans. And then there are revolving loans, repaid based on how much you have borrowed. Examples include most credit cards and home equity lines of credits. Rent to own service, not a loan. Use an item for a period of time and make monthly or weekly rental payments. Rental payments partly credited toward purchase price. Store can take back the item if you miss a payment. Usually rent to owns, those type of credits are usually done between the homeowner. Let's say you're renting or wanting to purchase a home and he's renting to you at the time while you're making your payments to the homeowner. Secured and unsecured loans. Secured loans are usually secured with either requires collateral such as a house, vehicle, cash, other sorts of assets can be pledged as far as a secured asset or loan. You lose the collateral if you don't pay as agreed. So if you're not paying your payments on time, chances are during that period of time, the bank will call you and try to take your asset away from you. Unsecured loans, no collateral, right? Often higher interest rates than secured loans. And that is very true. Usually when you have nothing to pledge, that means you are probably going to pay a higher interest when it comes to a loan. The cost of borrowing, you generally repay more money than you borrowed. Principal is the money you borrow, that's your payment. Interest, there's always going to be interest included when you borrow money, and that's the price to borrow money. And then there's usually fees associated with credits. Maybe charged for certain activities, origination fee. There's also other things that come into mind. As a commercial loan officer, sometimes whether you're pledging your real estate as collateral, right? There's title work fees, there's appraisals, and there's surveys that may need to be done and you will also need to have insurance on that asset as well. Prepayment, early repayment of all loans reduces interest cost, pays off the loan quicker, or early repayment of part of a loan generally reduces interest costs, potentially earlier payment dates. Some loans have prepayment penalties, others do not. It's always important when you're looking to get financing to make sure you're asking those questions as far as prepayment penalties, because there are financial institutions that will apply those to their credits. Just a matter of doing your homework and figuring what best financial institution is best for you. Truth in Lending. Truth in Lending Act, TILA, written disclosure, shows loan terms in clear and uniform manner. Receive the TILA disclosure before you sign for loan, can help you compare loan offers. And that is very true. Again, going back to the subject of comparing when you're receiving financing from different institutions. Part of the sample of the TILA disclosure, annual percentage rate, finance charge, amount finance, and total number of payments. Disclosure for mortgages, home loans, and some student loans will look different than this, and that is very true. Finance charge, annual percentage rate, charge, the dollar amount the credit will cost you, amount financed, and total number of payments. Again, total number of payments. These are just breaking this down. Shop around, use TILA disclosures, particularly for the annual percentage rates to compare offers, seek help if needed, housing counseling agencies approved by the U.S. Department of Housing and Urban Development, credit counseling organization.
That kind of just means like, don't be afraid to ask questions. Don't think that just because the first place you walked into and they told you this, that's where you have to stay. You can very much ask questions and come back. You're not obligated to stay within one financial institution just because that's the first place you went to and said, okay, now you can walk out of there and ask questions until there is a signed contract that says you will owe them X amount of money for a loan. You are not obligated to stick with the first financial institution that you go to. You can ask questions, you can call places, you can ask for advice.
Right. And whether that's mortgage, whether that's personal or business financing, right? Always make sure you're asking questions, especially some of these things can be very complicated. So it's best to ask as much as you can, and the lender should provide all that information to you. Preparing to apply for a loan. Factors lenders may use in their decisions. Methods vary by lender and by financial institutions. Key factors lenders may use: credit, capacity, capital, collateral, and conditions. I'm not sure if you guys have heard the 5 credits of C, right? Character is also a part of that too. So as you're talking to the lender about a financing opportunity, you may see them write notes sometimes just because they are trying to analyze the situation, the story that they may tell. In my case, I have to tell that story to a loan committee. So I'm always constantly writing notes. Credit obviously is a big factor. Capacity, capital, collateral, all those are deciding factors into your approval for your loan. Credit character. Have you paid your debts? Your credit reports and scores are used to evaluate how you have used credit in the past, how many credit accounts you have, whether you have filed for bankruptcy, had property repossessed or foreclosed upon, made late payments. Those are all things that appear on your credit score. When we pull those things, it's best to, especially if you know you have a current situation going on, it's best to let your lender know that as well. That way he's not, or she is not surprised when they are pulling your credit. Capacity, your present and future ability to meet your payment obligations, your debt to income ratio, how much of your income goes to pay debt, how much money you make extra a month, what are your monthly expense, what your monthly expenses are. We take a look into financials. Always be prepared when you're going into a situation where you're requesting financing. Tax returns are always needed. Financials, whether that's for a business, right? Those things are things that we are going to determine on how you can your ability to repay your debt in a sense.
And I will say, if you're in a hurry to get a loan or something, the faster you get those financials over to your loan officer, the quicker things are able to move on. Because there are times where the longer you take, you're like, well, why isn't this moving along? They can't move along without the correct documents that you need to provide to them.
That's right. And sometimes it may seem like a lot on our end. It's just, again, that may be the part of the story that we're trying to tell to our superiors to get your loan across to the finish line. So it's very important sometimes. Sometimes it's even important to ask, why do you need this? Why do you need that? Don't be afraid to ask those kind of questions for your lender, because they should be able to provide those answers to you as well. Capital, the value of the asset to loan amount, down payment, how much money is your checking and savings account, your net worth. All those things, especially on our end, there's a personal financial statement that your lender may ask you, and that is just to show your liabilities and your assets. That's generic information that the bank wants to see, especially ahead of time. Right now, more than ever, too, when it comes to financial institutions, deposits and savings checking accounts are a big factor right now. It's especially important to consider those things just because financial institutions want to grow a relationship with you. So whether that's what they can see your deposit, your savings accounts, right? And if you're going to be requesting for a loan, those are things that factor into those things. You can negotiate sometimes the interest rate when it comes to that. Just factors to consider about when you're requesting for a loan. Collateral, though, that is what secures our loan, right? That's an asset. It could be a house, car, money in the bank, just a variety of factors when considering that, especially when financial institutions are asking for collateral. Those are some of the assets that you can possibly pledge to secure your loan. Also, cheaper interest rate if you were to secure something with your loan, just factors to consider about. Conditions, length of time applicant has been employed. That's important. Your loan officer does not want to see your job history as you jumping from job to job within 3 months, right? It's best to have employment down at least for a year or at least 6 months at minimum. Interest rate, obviously that is also determined on what kind of loan, what your relationship is with the bank. Those things factor in. Your credit is also a part of that. Amount of principal, how the borrower intends to use the money. All stories that the lender may ask you when you're requesting for financing, I should say. Co-borrower versus co-signer. A co-borrower is a person that is borrowing on behalf of whether that's a company, yourself, right? All borrowers are expected to make that payment when you're requesting for financing. A co-signer, that's who backs the loan. That can be a guarantor or for the primary borrower. Loan proceeds go to the borrower, not the co-signer. Co-signer promises to assume responsibility to repay debt if borrower does not. So if you are a co-signer on behalf of someone, be aware that you will be credit scored, right? So it's important if someone asks you to co-sign on behalf of them for their credit, because you are now responsible for that loan. Just in case anything were to go bad with the co-borrower, you are now backing that co-borrower, essentially saying if that person does not repay back the loan, now it falls on responsibility on the co-signer. So keep them just important things to remember.
Kind of especially, I think you see that most often with like car loans, especially when someone young is getting a car for the first time. They often need their parent to co-sign with them. Because most times somebody young doesn't have maybe the job history or the financials in their bank account to really, or just the credit history or whatever is needed for that car loan. And they'll oftentimes need the parent to say, hey, if my kid cannot pay this loan, I will help them.
Borrowing when someone helps you manage your money. Responsibilities of a person helping you, acting in your best interests, manage your money and property carefully. Keep your money and property separate from theirs. Keep good records. Include you in decision making to extent possible. What to discuss. Why do you need to borrow money? Do you have enough money to repay the loan? How will you make payments on the loan? Will it affect any of your sources of income? What is the best borrowing option for your needs? And those are all good questions.
Yeah. And as whoever tuned in yesterday or has listened to the conversation from yesterday, as Danny mentioned, sometimes, especially if you're a business owner, the best times to apply for your loan are when you are at your best, especially like lines of credit. because at that point, you know, you have the good credit, you know, your financials are in good standing, and that line of credit or loan that you might get out is going to be there for that rainy day for when something does go wrong. Then you don't have to worry about being like, well, how am I going to get approved for this? Because right now, maybe my financials are great or my credit's not great, but you have this backing.
Right, right. And that's important, right? If you have a business line, or even a home equity line, which is considered a consumer loan, regardless of what you have, those are important things to know about sometimes, just because things come up in the future. And if you have a home equity line or you have a business line already established during a time where you had good financials and good credit, we understand things happen in time too. So if you have one established, it's best to just possibly keep it and to consider that down the line. If you decide to borrow money, you can get help considering the terms. You can get help completing the application. If you have any questions regarding applications, always ask your lender as well. Lender will decide if you're a good credit risk. Lender will not consider credit worthiness of the person helping you. Ask for help if you need it, to remember to make timely payments and keep in good record. That's important to know as well. If there's ever a time where you know you're going to be late on your payment, make your lender aware of all of that. They can help you with anything as well. Any credit situations, just anything in general. Make sure to always keep your lender involved in those things. Key takeaways. Be sure you can afford the payments before getting a loan. Also know how much it will cost and what will happen if you can't repay it back. Consider what lenders look for when deciding to loan money. Helps prepare you to apply for a loan. Even if someone helps you manage your money, understand the terms of a loan before you commit to it. That's important information.
Which just goes back to the ask questions. Even if you think it's a dumb question, there are no such thing as dumb questions. No. Always ask. And if you maybe don't have that relationship with your loan officer quite yet, ask your banker, ask the person who you see regularly at the bank, whether it be the teller or the personal banker, or maybe the branch manager, whoever it is within your bank. Even if you decide to go to a different financial institution than where you primarily bank out of, ask them, because if you trust them with your money, you should trust them with the questions for them to answer those questions that really are going to matter when it comes to making sure your money stays safe, especially within their bank. So yeah, don't be afraid to ask questions.
Not at all. Not at all. And you are absolutely right. If you can't get a hold of the lender, sometimes we are out and about, we are in business meetings, or just in general, right? Be sure to ask your nearest branch of who you do your banking with. They can get a hold of that individual as well. Just ask them as much questions as possible. Thanks. Any questions?
Do you have any questions for us today? No? All right. Okay, perfect.
Perfect.
Okay, thank you.
Thank you. I ran through that pretty quick.